Hello, everyone. Welcome to Follow the Money, brought to you by Nairametrics. My name is Ugodre. We do this every Monday on this station. Previous versions of this podcast, or this particular one on Nairametrics TV on YouTube. Just go to Nairametrics TV on YouTube, and for sure you will be able to stream, or rewind and watch and see me on studio. In the studio, of course, dishing out useful information. Of course, Follow the Money is my view, not that of Nairametrics, purely for educational purposes and not an investment advice. And so if you want to invest, always good for you to consult your own financial advisor before making investment decisions. What we do is just point you to opportunities, and by the end of the day, it's you to decide. All right. So, of course, Nairametrics is hosting its first Capital Markets Award May 23rd. We're going to start seeing nominee list out very soon. This award is purely based on merit. You're going to see a lot of companies that have been doing very well. Bank of the Year, Insurance Company of the Year, Company of the Year. So many amazing companies doing incredible things. Of course, companies here are companies quoted on the exchange. So if your company is not listed on the exchange, then you're not going to be qualified as nominees. All right, we'll go right into today's session. What a week it was last week. Despite the holiday, the Nigerian equities market continued bullish run, closing at above 106,000 mark for the first time in weeks. We've seen the stocks shed a little bit of its gains that were made earlier in the year. April was a bit of a tumultuous month for Nigerian stocks, but seem to have been recovering in May, and the index added nearly 290 points to close at 106,042, up 0.27% from the prior week. Trading volumes also jumped 19%, with over 2.1 billion shares exchanged. That's up from 1.8 billion the week before. So market cap then jumped from 66.4 trillion to 66.2 trillion, adding 2 trillion. That's not 2 trillion, that's like 400 billion or so. So basically, whenever you see market cap go up and volumes go up, it does mean that there is a lot of buying going on the exchange, and people are buying at a higher price, which is really good. So it means the bulls essentially took a hold of the market last week. Despite this gain, though, market breadth narrowed a little bit. 52 stocks gained, down from 64 in the previous week, while 37 stocks declined, an uptick from 27 the week earlier. So pretty much a very good week for Nigerian stocks. But what were the major drivers for this performance? The NGX Premium Index posted a modest gain of 0.38%, thanks to stocks like UBA, Zenith, and Lafarge, which all recorded solid moves. The Main Box Index also gained 0.47%, while the NGX 30 Index was up 0.58%. So these were the major drivers for the performance that we saw last week. Of course, consumer goods was also the star performer, and on today's Follow the Money, we're gonna be having a cross section of consumer goods, particularly the FMCG industry. I'm going to profiling results, Q1 results for the likes of Nigerian. For the likes of Nestle, Cadbury, Boa Foods, Unilever. So these are FMCG companies listed on the exchange. We're going to look at how well they performed for Q1 this year. And so, kind of looks like they probably all did well. That's why you're seeing consumer goods index up 2.89% the week before. Of course, industrial goods also rose modestly by 0.41%. Oil and gas stocks took a hit, with RDL dragging the index back 2.9%. The banking index also slipped 0.38%. Of course, due to market sell-offs for EcoBank, Transnational, and Access Holdings. Interestingly, EcoBank did push out his own numbers as well, and the numbers were quite good. So, surprised here that the market deemed it fit to sell. So, we're going to go right into the top gainers for the week. So, top gainers for the week were a number of them. We saw the likes of Fitzen gaining 22.85%, University Press gaining 20.8%, NACO gaining 20.1%, Cadbury gaining 19.9%. Damn. And of course, Nigerian Brewery is gaining 17.9%. Legend Internet, that's a new company I just listed on the exchange, also posted a 32.4% gain. And then ABC, that company still exists, Associated Bus Company. I mean, ABC Transport? Yeah. They have been listed on the exchange for years now, and I wonder what investors are seeing in here that I am not seeing. I'm probably going to look at this stock closer this week. They gained 44.87% this week alone. Now, why is this important to you? Of course, you probably own some of this stock, so you want to go check if your portfolio is also in the green, because some of these stocks are all posted remarkable returns. I mean, like, I've not mentioned anyone here that's 10. So everything has done basically 10% and above. Last week, of course, we did have losers, and topping the losers were like the likes of Aradel, Triple G, and Access Holdings, like I mentioned earlier. Most of them were down like 8%, and Multiverse was one of the mega losers with 18.59% drop, and of course, EcoBank also fell 18.75%, despite posting a similarly good result, Q1 result, probably one of his best Q1 numbers in a while. But, investors have different reactions. There were a whole lot of results that were released last week as well. In case you're not aware, you might want to check Nairametrics for a breakdown of these numbers. Seplat releases numbers, Transcorp also, Aradel Holdings, like I mentioned earlier, Total Energies Marketing also released numbers, First Holdco, UAC, Dangote Sugar, and Access Holdings. So they all released their Q1 numbers last week, and it will be interesting for you to check and see how well they perform. It's still the earnings season, meaning that a lot of companies are still going to be releasing their first quarter numbers, and so we will be tracking these every day on Nairametrics as usual, exclusively. That's what we do. But I want to end this segment of the show with something people always talk about. Have you ever heard of May? Like what May means for the Nigerian, for the stock market globally? There's usually this saying, they tell you sell in May and go away. Yeah, they sell in May and go away, and then come back later in the year. I think the whole idea is that, after May, the stock market always goes through a downturn. And then when it goes through that downturn, it starts to rebound again towards the end of the year. And so, that's where that came from. And that acronym has been around for centuries. So it's not like something that just started now, but I mean, it's a global term, like sell in May and go away. So are you selling in May and going away? I mean, I did provide some kind of context to that in my latest Follow the Money article. It's exclusively for my followers, people who are exclusively interested in making money from the stock market. Of course, you can access that website, ftm.ng. I repeat, FTM. FTM stands for Follow the Money, so ftm.ng. And you would see some of my exclusive takes on some very important stocks. I also have my buy, sell, or hold actions there as well. So I did break down what selling May and going away means for us now. So should we be selling in May and going away, or should we be selling in May and then buying back, between May and November? I don't know. So you might want to read to check that out. All right, so we're going to be looking at a number of results when we come back during the break. Cadbury, like I mentioned, did push out numbers, so you're going to be seeing that pretty soon as well. And of course, we also had the likes of Nestle, Unilever also release their results, and we're going to be looking at each of these numbers when I come back in the second half of the show. This is Follow the Money, brought to you by Nairametrics. Be right back. All right, welcome back. This is Follow the Money, brought to you by Nairametrics. My name is Ugodre, and of course, we do this every Monday on this station. Of course, have you Did you know we have the latest episode of our Drinks and Mike's podcast? Yeah, that Drinks and Mike's podcast that you all love. Yeah, we took an Easter break, but a new episode popped on Friday, last Friday, so you might want to go check it out with the gang. We had a new guest on in studio as well, breaking down what happened in the week globally. Drinks and Mike's, of course, is available on our YouTube channel. Just go there and just search Drinks and Mike's Nairametrics, and you will see that episode and previous episode as well. It's going to be another explosive episode this week. New episode always drops every Friday, 6 p.m. So just hit that notification bell on your YouTube. Of course, subscribe, follow us, so that you can always get new episode. We also have several other interesting podcasts on Nairametrics TV, all geared towards informing you financially. All right, back to the show. So Cadbury did release its Q1 numbers during the week and posted a pre-tax profit. Yes, Cadbury is back to profitability, 8.5 billion naira after multiple quarters of losses. It's been a terrible last 2 years because, of course, of the exchange rate. But the company has stood on steadfast and appears to be turning the corner, posting its first pre-tax profit for the quarter, 8.5 billion. Sharp U-turn from 10.4 billion loss reported the year before. So you can imagine how much that means for that company. So what were the major drivers? Revenue, of course. Cadbury's revenue jumped to 32.7 billion, up 57.1%. Compared to the same period last year, where it dropped 23.6 billion. All of that came from, of course, the domestic market, because Cadbury sells mostly to Nigerians, locally. And so what was the reason? I mean, it's a combination of volume push and price adjustment. A whole lot of companies increased their prices last year. And so companies that seem to have done better were companies that were able to increase prices and still reining on cost. And that's how they're able to eke out some of this profit. And Cadbury basically did the same here. And of course, higher sales did come with higher cost. Operating expenses also jumped, but that was not enough to affect the company, as it hit an operating profit of 9.6 billion. And then when you take away finance cost, it fell just slightly to 8.5 billion. So good news here for Cadbury, and that basically drove a surge in its share price, making it one of the best performers during the week. Share price was about 29 naira by the time this result dropped, and Cadbury is up 36% year to date already. So for those who have Cadbury in their portfolio, congratulations. This stock seemed to have done pretty well last quarter. So it's going to be interesting to see if they can sustain this as we go on to the end of the year. Was Cadbury in my portfolio? Is Cadbury on my watch list? Is Cadbury one of those companies that is our buy, sell, or hold recommendation? Well, you might want to go to followthemoney.ng, ftm.ng, I beg your pardon, ftm.ng to check my buy, sell, or hold actions. ftm.ng, of course, is in Nairametrics' own website, but it's just a standalone website strictly for subscribers. Unilever also delivered strong Q1 performance last week. The consumer goods company also reported a pre-tax profit for the quarter of 10.7 billion. This was much more than double the 4.3 billion they did the same period last year. So Unilever, apart from the fact that they did post profit the same period last year, they more than doubled that number. And this was also about sales. Sales numbers seem to have increased, and the company's revenue rose to 46.9 billion, up 45.3% year on year, mostly due to sales across board. So Cadbury, Unilever makes money from its food products division, makes money from its personal care division and also makes money from its beauty and well-being division. So food products contributed 27.5 billion to that revenue as well. And then, of course, personal care 15.1 billion, beauty and well-being 4.3 billion. So, of course, costs did go up, like I mentioned. So it's usually companies that are able to boost revenue. So think about it. So, I mean, Unilever did 146% increase in its revenue, but cost of sales went up by 40%. And so you see that revenue grew faster than cost of sales, and that's why it's been able to make that much profit. Of course, pre-tax profit, like I mentioned, 10.7 billion, up 147%. They did incur a finance income of 2.6 billion, up 33%, but all not enough, to slow down the profitability growth, just because the company was able to do very well with revenue, and so revenue helped boost profitability by around 46%. Of course, Unilever shares trade at 43 naira per share, and it's delivering a year-to-date return of 30.5%. So one of the best performers out there when it comes to a consumer stock. So do you have Unilever in your portfolio? If you do, you might want to check it. You're up 30.5% year-to-date at least for Unilever. And of course, another stock that was in the news during the week was Nestle. Nestle, one of those, solid consumer goods stock, FMCG. It's been around for decades and always maintaining profits for its shareholders. But Nestle has had serious challenges over the last 2 years because of unification of the Naira, which meant that they did suffer significant FX losses, and that basically affected their bottom line. And so that is why they had been recording losses. And I mean, that also decimated their balance sheet, essentially. Shareholders' funds basically, wiped out. But looks like there is some recovery in the horizon. And Nestle also reported a pre-tax profit of 51.15 billion in 1 quarter alone. 1 quarter. That is like a resurrection, because if you consider that Nestle reported 196 billion loss this same period last year, that's like reviving the dead. I mean, like 196 billion this same period last quarter. Now the company has turned it around, and they've now reported 51.15 billion naira profit. Yeah, and that is incredible and remarkable turnaround for one of the largest FMCGs in the country. So how did Nestle get here? Well, for starters, revenue surged 294 billion. They almost hit 300 billion revenue in 1 quarter. So it kind of looks like Nestle is going to cross that 1 trillion revenue mark this year. Revenue was up 60.7% year on year. It's a big number. And the growth came largely from Nigerian market, which makes up over 90% of Nestle's market anyways. And despite this revenue growth, we did see increase in its cost. But like I said earlier, so long as your revenue is able to outpace, your revenue growth is able to outpace your cost growth or your operating cost growth, the company is always going to find profit to make. And that's really the thing here. So when you're in an environment like this where things are pretty expensive, where cost is high, you always want to focus on sales, man, because if you're able to drive up your sales, either by adjusting prices or by pushing more volumes, you could to a large extent cover up for all those price increases that you're all experiencing. And that's what happened. So revenue for Nestle up 60% to 294 billion, operating profit up 254% to 74 billion, and pre-tax profit, of course, 51 billion. Earnings per share now 38 naira per share. So, but Nestle still has a negative shareholder funds, which means it's still underwater, and perhaps people are saying, what's going to happen? Are they going to raise capital at some point? Because something has got to give way, and that is why I suspect Nestle share price has been rising. When we started talking about Nestle on this show, it was trading at about 800 something naira per share. Now, Nestle is about 1,100 naira per share. And did you maybe miss that boat? For those who missed that boat, well, too bad. But for those who didn't miss that boat, they're already enjoying a intrinsic gain because Nestle is up 25% this year alone. Look, stock market, money is there, 25% in this year alone. We're still in May. So that's like how much people make in an entire year. But for investors in these stocks at the start of the year, they're up 25% already this year. I mean, like, that's why I love the stock market because there's just so much money to be made there. So Nestle, good results. We should watch this company over the next few quarters because Nestle easily could hit 1,500 naira per share with the way it's going, especially if it decides to announce a capital raise. Could see that happen on the horizon. But of course, check ftm.ng for my views on Nestle. Exclusive views. I'm not going to say it here. All right, so we'll go on to the next stock, and that's Dangote Sugar. Dangote Sugar also released these numbers. I would characterize that as sweet sales and bitter bottom line. Yeah, I mean, sales numbers were very up. Dangote Sugar has had a very tumultuous 2024, even worse 2023 as well. But looks like we're seeing some kind of recovery. Dangote Sugar is one of the largest sugar manufacturing companies in Nigeria, if not even in West Africa. And so pretty interesting to see what's happening with his numbers. For the quarter, Dangote Sugar pulled in a record high revenue of 213.9 billion, up 74.3% year on year. And so cost of sales, however, was up 80%. You see what I'm talking about? So if your revenue is able to outpace your cost, then it's pretty likely that you can make a profit. But in this case, cost growth outpaced revenue growth. So even after giving you 74% increase in revenue growth, Dangote Sugar still suffered a higher cost of sales. So gross profit was just 9.2 billion, not enough to cushion the impact of operating expenses. Nevertheless, operating profit was still up 48%, and the reason why we're still seeing Dangote Sugar in a loss position of 23 billion is because of finance costs. So most of its finance costs are FX related, and so that continues to affect the company. Of course, some of the costs that he experienced was due to raw material increases, staff costs, repairs, and depreciation. But I kind of think that with revenue booming, Dangote Sugar at some point will turn this around. I do expect them to record profitability either in the second or third quarter of the year. Of course, the problem with sugar is that sugar also has a lot of external headwinds, not just internal, because of the way sugar is made. So most of their raw materials are also imported, and so they are often exposed to global headwinds. And with tariff out there, a little bit shaky for Dangote Sugar, but this is one to watch anyways. Another company as well that did release its numbers is Boa Foods. Boa Food is turning out to be one of the biggest or largest FMCGs in Nigeria at the moment. And so Boa reported a pre-tax profit of 136 billion. So you can see Boa Foods' profit is even now larger than Nestle. So, I mean, from nowhere, Boa Food has just come in there and is one of the largest indigenous or largest players when it comes to FMCG in Nigeria. Turnover hit 442 billion. Way higher than Nestle. So Boa likely will be hitting over 1 trillion in revenue this year as well, up 24% from 356.9 billion the same period last year. And so where did Boa make most of his money from? Well, fortified sugar division up, contributed 165 billion. Bakery contributed 163 billion. And then non-fortified sugar 45 billion, and his pasta division 41 billion. I'm sure you're wondering, how come Boa Food is doing better than Dangote Sugar? Well, Dangote Sugar is just pure sugar, but Boa Food is a lot more diversified. and so able to provide useful revenue addition to top line. Within the Dangote group, you also have Nascon anyway, so Nascon would compete with Boa Foods as well to a large extent. But Boa Foods doing pretty well. Cost did go up as well, but not enough to affect the company's profitability. Operating profit came in at 138.9 billion, up 33%. Boa Food now has total assets of 1.1 trillion and return earnings of 546 billion naira per share. Now, Boa Food's share price hasn't really hit the roof like I expected, or like I expect. It's just up 0.72% this year to 418 naira per share. But it's been one of the best performers in terms of numbers for FMCG. So that has been my FMCG watch. Which of these stocks catch your fancy? You want to know which one catches my fancy? Check me out on ftm.ng. Is it Cadbury? Is it Nestle? Is it Unilever? Is it Boa Foods? Which one of them catches my fancy? You might want to find out. But these are all solid takes, solid numbers. Next week, we're going to be profiling another industry. Maybe banking. People have been telling me, Goodray, when are you going to profile banking? We're probably going to look at banking next week, or insurance. You never know. Just tune in for Follow the Money on the station this time next week, or check any of our websites, any of our podcasts on Nairametrics TV on YouTube, and then you see me break things down further as well. Until we see you again next week, do have a profitable week ahead. Goodbye, everyone.